All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been off and rolling here for about an hour. Very interesting open this morning. We saw, a gap down after some of the sell action that we saw yesterday. And then, open up and we see this high volume surge that has, subsequently been sold into by about 10 points here. We are just seeing bigger moves than what we've seen, this year so far, in terms of how the S&P futures move, and that is likely to continue with everything that is going on out there. So let's start with the challenge. We have Dollar General on the board. Now this stock sold off yesterday into the close. With the market, low volume. You can see nobody cared. Right, very low volume. And what does that tend to indicate? No real change. Today gapped down what was about down $1.80 at one point at the open here, and then it's rallied on back. It's up about 50 cents right here. So we're not at the stop level. Not even close here with the stop level. But our option value, we continue to eat some of the time decay, and we have a little delta loss here on it as well. But still in a good spot, and something that we could easily see. Push off of these levels and push on higher. I would want to see it close in the green today, but regardless here, we're not on our time stop. We're not on, near our price stop, so we'll continue to hold that. Now, it doesn't prevent us from entering another position. So the next signal, could go and run with that. We have Facebook, Procter & Gamble, Twitter, and Mexico ETF, all with downside crossovers on them. If you take a look at something like Twitter, this is what it looks like. Twitter has earnings upcoming here, but Procter & Gamble, has that little downside crossover, but isn't going to trigger there. Facebook, big bad day here for Facebook. One of their worst days in quite some time, off of their report. Nothing that's very close to triggering. We could see the EWW trigger bearish. Chances though are fairly slim given where some of the other stuff lies. But this is something that I would like to get involved in. You know me, I do think the market has a further pullback in it. And EWW would be an interesting way to play that. But again, for the challenge, I can only play it if it's a signal. So far, it is not. So we'll see kind of how it shapes up this afternoon. On the upside crossovers, we have Coke and Boeing. Now, Coke, you can see big gap up here and kind of shot up. This had a downside crossover yesterday, and this is coming off of their earnings report. And you'll see Pepsi, not reacting too much there to it. And then Boeing, which we've talked about, in terms of the earnings and everything else. It's down today, but has an upside crossover. Very, we do see this every once in a while. It just has to do with, having one of these sell days, big bad sell days lopped off the moving average. So that's all that's going on there with Boeing. But chances of triggering, like I talked about yesterday, are very, very slim. Nothing on the board right here. A few things that really could kind of shape up this afternoon. Very interested to see. But, as we get through this earnings season, as we're kind of in the heart of earnings season here, more and more stocks will become playable in terms of their option values, which will be nice, and will make it a little easier to go out and run with whatever signal comes in. We're still on a good pace of signals, right? Good pace of signals here. This is the pace I expect. but so far, just only been able to trade 4 of them with just how the option values have worked out, and then this original Netflix obviously didn't have the cash to start the challenge to go out and trade that there. So anyway, that's where things are. I was asked about the market vibe, and market vibe is still bearish. Yesterday it did not improve. I'm not going to go pull it up yet, but did not improve to the point where it went neutral, to the point where it went bullish. It continues to be bearish. And, we saw yesterday, there was, or the day before yesterday, there was a nice rally in the market, but bullish percent index did not go up. Right? If you recall, one of the characteristics of the upside of the market throughout October, November, December is that on most down days, bullish percent index didn't go down very much, if at all. Well, we've seen the opposite start to take shape, where even on the up days, we're not seeing the bullish percent index, improve. And the bullish percent index is squarely in a bearish mode here, it kind of corresponds to the market vibe. We got a bearish market vibe before we got a bearish bullish percent index. But, when you look at performance metrics, you look at accumulations, distributions, we are still talking about, very bearish territory here for these. And, can we rally? Sure. And we talked about that earlier this week and some of the possible rally points and all of that. But we're not in a point where, we are seeing the market vibe improve and, we're going to just, hey, the correction is over and all of that. Yeah, let's face it, we've only really had 2 big down days here, or maybe 3, depending on how you look at it. We've only had 3 down days here in the market. And, the percentage pullback is incredibly nominal here. You think about fund managers, right? We talked yesterday about this analogy of, of a basketball arena, right? We're kind of in the first quarter, maybe getting into the second quarter when it comes to the coronavirus, right? You think about fund managers, what are they going to start to do when they're heavily exposed and they start to see that they go red for the year? Which is what a lot of fund managers are starting to see, because it is one where, let's face it, tech has dominated the rally here to start the year. And, so more diversified fund managers, they're sitting in the red. What are they going to do when they're sitting deeper in the red, right? You got the coronavirus, you've got earnings there, and earnings is a very interesting season, and we'll talk more about it. But it is one of those where we're still in the early innings of ultimately what could happen. If there is some sort of big upside to come, we'll see the metrics shift. We'll see them change. But when you look at pullbacks, they tend to be 3 to 4 weeks in length, and we're in week 1. Right, we're in week 1 here, and so we are going to get big rallies. We're going to get big sell-offs, and that's just going to be the nature of the market here for the next 2 to 3, maybe even 4 weeks. Obviously, could change depending on the news cycle, but as things sit, that's what is being indicated here to us. All right. So anyway, that's a little bit on the market now. Earnings. We've seen a lot of earnings here. Microsoft, after the bell yesterday, great report. We saw Apple yesterday, the day before yesterday, but had its reaction yesterday. I did go out and I bought an Apple put spread. I shouldn't admit that. Yesterday, I bought an Apple put spread looking at the 300 mark. Now, it's not a trade I recommend or anything else, but it was, and it'll probably bite me in the butt In fact, I fully expected to, but I couldn't resist. I simply couldn't resist, and it was a way to scratch the itch. But that's it, right? There's nothing too bearish here in the earnings, or anything of that nature here with it. So we're getting these reports; they're coming on in. We're hearing a little bit about China. Starbucks yesterday, talked about China and basically said, look, it's going to impact our sales. And, that's where a lot of the growth for Starbucks is coming from. It's coming from China. And, when you go out and you look at some of the videos being posted out there of the Wuhan province and other areas, even, like the Beijing, transportation hubs, they're empty. They're empty, and you think about that and how many people aren't traveling and how many people aren't grabbing a Starbucks. It's going to be a big impact, and that's being priced in, here to the stock. Now, ultimately, Starbucks is one of the first stocks I want to be into when this whole, coronavirus subsides, if and when, right? But for now, it is one of the most vulnerable, and we heard them talk about it in the earnings report. Stocks like Disney, very vulnerable, here in that, with that travel. Even some of the airlines like American, very vulnerable, to, the news cycle and what is happening out there, right here, right now. And so we're hearing it from some of the earnings, not so much from some of the big tech names, right? And that's where, some of the safety is, Facebook takes a little bit of the luster off of tech here this morning, but Microsoft is compensating here for that. As we go here this afternoon, we have Amazon, we have Visa, big reports, out of them here this afternoon. We'll have Wynn Resorts, which, we'll hear kind of a little bit about the guidance and, hey, how is this contagion, affecting the, that industry, which will be, very interesting. And I think there's a lot of risk there, for it. We heard from UPS this morning. You could say huge drop here for UPS. And, that is pushing FedEx lower. And we could be hearing from Amazon here later today, and that could put both UPS and FedEx significantly more in the red. And so while we have a growing industry, very susceptible to what is going on out there right now. But anyway, those are some that have been reporting. Tomorrow will be a very light day here, but we will have Caterpillar, Chevron, and Exxon, which are big reports here. Caterpillar to me is one of the most interesting reports for the market in general, in terms of, hey, how are investors going to be looking at the market going forward? Caterpillar is in this negative earnings cycle. You take a look, they're having trouble keeping up with what 2018 was. They're seeing earnings declines quarter over quarter, year over year right now. And revenue declines here as well. And so it's a stock that's made some massive upside moves here, even though they're going into this period of revenue and earnings decline. And so a stock that, could be very susceptible, a stock that could revisit 110, a stock that even could revisit 100 and break 100 should some panic get pretty hefty. If there's not a really solid report here out of Caterpillar, those numbers are going to look pretty crabby here for investors. And, we could see Caterpillar be in a world of hurt, here over the course of the next several months. Caterpillar has had some strong volume distribution in the stock here over the course of the beginning of this year, and it's very difficult to make an argument that Caterpillar is cheap. And so, to me, that's perhaps maybe the most important earnings report of the entire earnings season, and that's probably a little overstated, but it's important. And I do think it's going to drive investor mentality here in quite a big way. All right. All right. Well, thanks for hopping on. Have yourselves a fantastic day. I'll be all back on here with you this afternoon, and we'll take a look at where the signals lie, and hopefully be able to jump into something. It's one of those. Yeah, we haven't had a lot of playable signals here, but we've seemed to get signals every Thursday afternoon, which is really interesting. Some people say you should never trade on Thursday afternoon, but obviously I don't subscribe to that. But hey, we'll see kind of how things shape on up here. Again, thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.